Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club, and welcome to the final part of my Investing 201 video series. If you need to catch up or simply want to rewatch part 1 and 2, the links are in the description below. The last video is really important as I'll show you the easiest way to avoid the 4 investing pitfalls, why a YouTube video could have shown you how to make 200% in 16 months, and the acclaimed investing strategy for less than the price of a nice dinner for 2. Now, so far, we've covered a lot of topics and investing philosophies like asset allocation, buy and sell strategies, and even rebalancing. And you might be thinking, well, that sounds all well and good in theory, but how can I make this real for me? And that exact question is the reason a lot of novice investors don't outperform the market and find themselves in those nasty pitfalls. They struggle to bring these sound principles into their portfolios, and they end up either, 1, being too conservative and not meeting their spending requirements, 2, being too aggressive and seeing the portfolio go up in flames, not good, 3, trying to time the market and failing, as all market timers eventually do, 4, delegating their financial responsibilities unwisely, allowing someone else to make these mistakes without your being able to stop them. That nice young man down at the Merrill Lynch office, for instance. Anyway, these mistakes have plagued novice investors for years, and that's why I've developed 4 model portfolios that, when combined together, help you avoid all 4 investing pitfalls in one go. The first portfolio is something I've mentioned on the channel a few times, the Fission portfolio. My best-selling book is the basis for this simple investment system based on a Nobel Prize-winning strategy. In essence, these are solid, lesser-known opportunities that provide lower risk but longer-term gains. If you had bought into our initial recommendations in 2003, you would have seen open gains, including dividends, as high as 112%, 328%, even 678%. That's what long-term, low-risk wealth should look like. It may take time to build, but it's time well spent. Even our newest position in the portfolio has delivered 188% since January 2020. With the Fission portfolio, the recommendations are aimed to avoid being too aggressive in its approach toward the market. Instead, the portfolio aims for consistent but longer-term wealth. The second model portfolio I've created is the Oxford All-Star portfolio, and it's the perfect embodiment of an investment system I talked about in episode 2. You need to pick stocks through an emotionless and consistent process. So, question, who is better equipped to earn a high return on their stock portfolios over the next 5 years? You or Warren Buffett? If you're watching this series, you would probably pick Buffett. And that's exactly what the All-Star portfolio does. Track the trades of the world's top investors, following their picks to success. In essence, the recommendations avoid the media hype around so-called hot stocks, and instead they focus on when the smart money piles in. The old saying goes, buy the rumor, sell the news. And the All-Star portfolio helps accomplish just that while avoiding the pitfall of mistiming the market. Now, it goes without saying that not every trade is a winner. Even Buffett can be wrong every now and then. So the Oxford's trading portfolio is a great counterbalance and partner to the All-Star portfolio. The trading portfolio is a collection of mid-cap to large-cap stocks consisting of active market opportunities that take advantage of great performing companies. We're looking for those conservative stocks and bonds that are the best assets in their class. However, unlike those online forums, we're not holding forever. We're letting our investment strategy play out as it should, essentially isolating us from the media frenzy around market swings and market timing. With these 3 portfolios, I've crafted an investing foundation for your portfolio. The majority of the assets in these are lower risk, so it's best to size your position accordingly. But I've also developed a model portfolio for these higher risk opportunities that have a much higher potential reward. The 10 baggers of tomorrow is a collection of more speculative stocks with the potential to rise, as the name might suggest, tenfold or more. When I first announced this portfolio at a special event in Stowe, Vermont, one of the first stocks I talked about was called Applied Optoelectronics. At the time, it was trading for just over 11 bucks, and a year later, it was up to $96. This is the type of stock I include in my 10 baggers of tomorrow portfolio. These investments are more speculative in nature, but just as smart of an investment as the gone Fission portfolio. The key is position sizing here, letting the majority of your funds grow slowly and safely, while a portion is invested in the higher risk positions. The 10 baggers of tomorrow portfolio helps avoid the critical pitfall of being too conservative and not letting your gains stagnate. Now, it's really beneficial that all four portfolios work together in tandem. The whole is truly greater than the sum of its parts here and has been for the past 20 years. But you might be thinking to yourself, well, hold on, you've only covered 3 pitfalls. You said I could avoid all 4. What about poor delegation? The answer to that question is simple, and it costs less than a dinner for 2. Normally, to follow these types of model portfolios can cost thousands of dollars, not to mention brokerage fees and commissions. But my way is far less expensive, and that's because all 4 of my battle-tested model portfolios are available to subscribers of my critically acclaimed research service, the Oxford COMMUNIQUE. Since 2003, the COMMUNIQUE has provided readers with clear, concise, and award-winning research. We haven't had a down performance on our official closed trades for 17 straight years, not even during the Great Recession. With each monthly issue, I'll share all my insights on the economy, interest rates, business developments, and of course, my favorite stocks with the most upside potential. I'll also send out weekly portfolio updates to make sure everyone's up to date on the recommendations. My colleague, Nicholas Vardy, based in London, is also a core contributor to the COMMUNIQUE. So if you enjoy the insight and financial research in our YouTube videos, then I think that you'll really enjoy the COMMUNIQUE. I've shown readers the chance to grow their wealth in extraordinary ways, like Marvell Technology, which I talked about on September 17, 2019. It went on to double in a little over a year. Or how about Neogenomics, which shot up 200% in about 16 months. Look, it's honestly unfortunate if you missed out on these gains because this YouTube channel posted a video detailing where to find my new recommendations. You could have watched that 5-minute video, joined the Oxford COMMUNIQUE that day, and bought into both of these stocks before their big runs. By joining the Oxford COMMUNIQUE, not only would you receive research from some of the top financial minds, but you also would get some peace of mind in knowing that your money is still in your control. You can pick the recommendations that best match your risk tolerance and avoid letting the wrong people take control of your finances. And the stocks that could fill your portfolio would come from vigorous research and not some keyboard warrior. That's exactly how to avoid the 4th and final pitfall, poor delegation. With the 4 model portfolios, you can bring to life the ideas of asset allocation, true diversification, rebalancing, position sizing, and smart speculation. Each portfolio has a specific buy and sell strategy, so nobody is making any irrational decisions, and you can choose which investments to follow based on your own risk tolerance. So essentially, the Oxford COMMUNIQUE is the easiest way to avoid all 4 investing pitfalls and increase your net worth. Now, a yearly subscription to the Oxford COMMUNIQUE retails for $249, which is a bargain to begin with. Like I said earlier, other investment services can cost thousands of dollars. But as a thank you for watching this video series and supporting this YouTube channel, I want to give you a substantial discount on the service. You'll only pay $49 for a full year of the Oxford COMMUNIQUE. You can buy a full year's worth of research from an award-winning publication, learn how to set up your ideal investing portfolio, and avoid those 4 major pitfalls. A while back, the Wall Street Journal reported that the average stock costs around $67. So you could either take the free factoid from those online message boards and invest that $49 into 1 share of stock, or subscribe to the Oxford COMMUNIQUE for a full year of battle-tested financial research. Again, properly delegating the research aspect of investing is critical. Now, of course, I need to mention that no investor is perfect, and obviously the COMMUNIQUE has an occasional losing trade, but my recommendations have averaged over 26% with a holding time of a little over a year and a half. All this without you losing precious time to enjoy your life. I'll tell you when it's time to buy and when it's time to sell, all based on our rational investing strategy. Our research has outperformed the S&P by nearly 10 times over the past 20 years. So if you want to learn how to take your investing to the next level, avoid those pitfalls, and still be able to live your life, perhaps even improve it, then click on the link below. You'll be able to see everything you get with your yearly subscription to the Oxford COMMUNIQUE, all for the downright absurd price of just $49. And by the way, you're getting more than just 4 model portfolios with a subscription. There's a lot to go over, so be sure to click that link below now. Thanks for watching. This is Alexander Green, and I hope to welcome you as the newest subscriber to my Oxford COMMUNIQUE.